Bitcoin's again on the verge of breaking out of $49,000. This was the peak back at the ETF. And now I've got a lot of data to get through with you guys today. Today we're going to look at the emotional side of the market, looking at the specific data points for the fear and greed, what the rest of the year holds for the S&P 500. We've also got massive data points here looking at what happens if February is in fact green for the S&P 500. Now, this is going to play a big role in the crypto bull market, hitting that 29, 30, 50, 100x. So we need to pay close attention to what's going on in the traditional markets. And what better place to do that than your home of macro cycle analysis, studying the past to forecast the future, looking at the stock markets, crypto, Bitcoin, and the big one, the real estate cycle. Links in the top of the video description, which we'll talk about later in the video. And of course, our channel sponsors here with SwiftX, Bybit, and BitGet. Get yourselves signed up before these cryptos get even crazier and you are scrambling to find where to buy the cryptos from. All right, guys, let's kick it off with the S&P 500 and some of that economic data. Now, it may sound like it is the boring stuff, but this is the thing that keeps the engine running for Bitcoin and cryptos. They are relatively small asset classes, so we need to see more risk coming into the market, more people wanting to bet with their money so that some of that can flow out into the crypto and altcoin market. And we're still seeing signs of positive results here, or more money coming into the space. Credit card debt has been one that I've focused on in the last couple of videos, of course, but just looking at it here, there are some that still think credit card debt is too high, but net wealth is also up a lot as well, and that is in fact double. It's not that you can take the credit card debt and turn it into your own net wealth by taking the credit card money out and then saying it's part of your net wealth. Of course, that's debts and credits. But at the end of the day, there is a lot of net wealth still out there that is getting ready to hit the markets. And it hits the market even harder, especially when they keep seeing prices go higher and higher and higher. And we've seen that with real estate around the world, the US, UK, Canada, Australia. Things are getting a little wild. And you probably are noticing some of those effects and seeing how this is playing out in real time with the 18.6-year real estate cycle. So more on that in just a moment. But taking a step back to the credit card debt, this particular point comes up a lot, especially with viewers. So you might be asking this yourself right now. The average net wealth may be higher, but how is net wealth for the lower to middle income households? Now, Ryan's saying here that this has gone up, and we use a lot of Ryan's data here on the channel. So of course, check him out on X if you want to stay up to date with some of those data points. Talking about the bottom 50, they've also seen more wealth as a percentage than other areas. Now, this is what stumps me every time. The same thing that a lot of people think. I think the graph would look different if we take out the high income for both wealth and credit. Of course, it's going to look different. If you take out any sort of data, it's always going to look different. But I think what they're alluding to here is that if you take it out, then the bottom, middle, and lower income earners have far less than what the higher income earners do, or the higher wealth in our society. And that is true from what I have seen in the data. Why the hell do you care so much, or do these people care so much about the lower and the middle class when it comes to investing itself? You want to know where the majority of the money is going. This is, to me, an absolute waste of time trying to figure out what the lower and middle class are doing. So I'm saying, yes, it would look different, but it would also be mostly irrelevant for determining the direction of the stock market. And I ask you, what are you here trying to do? You're trying to make money from the market, or you're trying to predict the economy and go on news programs and tell us how bad everything is? If you're trying to predict what direction the market is going because you want to put your money somewhere that's going to make more money, then forget about the lower and the middle class and what they are doing. Remember, this is all about what the stock markets are doing and where the money is going and what the charts are doing, as opposed to what is happening in the economy. Eventually, things get a little out of hand, and yes, we will have significant pullbacks, significant recessions, even a potential depression. I'm just saying that this is the precursor to that collapse. And unfortunately, the lower and middle probably will get hit the hardest when things do turn down. Why are we trying to follow what those guys are doing? We want to know where the rest of the money is going so we can continue to follow the market and where it is going. Now, another big one that's been on the forefront for months now, probably even years, is the yield curve inversion and uninversion. We haven't got to the uninversion yet. When this red line comes back above the other red line here, that's when the market is uninverted. Now this chart is the US yield curve 10-year minus the 3-month. And I've also seen the 10-year minus the 2-month. Depends on the analyst at the time. Essentially what we are seeing here is the approach to that uninversion point. And as they say, well, the yield curve, once it uninverts, that's when we have the countdown to the recession. So like you guys know, if you've been following the channel, as I suggest you do, hitting that subscribe button, we have said that this recession is a little way off from where we currently sit in 2024 now. So we had 2022, we had 2023, and there was no recession through that period. And we've gone over many times why other people think we're in a recession, but we are not in a recession. We will get to that point, but we're going to have a very significant move to the upside before we get to the major recession. And so as we look at the yield curve inverted, the S&P 500 has gone up 30% since it inverted in October 2022. So let's have a look at the 3-month here and where it inverted back in. There it is, October 2022. So it's been inverted for a year and a half now. So by the time we get to that uninversion, it can take several months, sometimes a year or more, before you see that recession. So if we take another 12 months to get back to that uninversion point where this blue line goes above the horizontal black line, and then there could still be another 12 or so months, maybe longer. You can see back through this period in the late 80s and early 90s, there was quite a long time between the recession, which here is around July of 1990. The first uninversion was back in August 1989. So you can still see a pretty significant period between those readings, which could then lead us into the end of this cycle, and we get the pullback that we have been anticipating now for many years. But of course, the markets are heading in the direction of the bulls for quite some time, and the majority of people have missed out on the lows, and that's pretty much what is going to sucker them into this peak before we get that move to the downside. So how are we going for 2024? Well, this one looks at the max year-to-date return in February. If we see a positive result in February, how many times has the rest of the year been green? So we have the S&P 500 index returns final 10 months of the year when there is a 5% return for February. Now, 90% of the time, the rest of the year has been green. And looking at the, that's the last 10 months, and looking at the calendar year itself, well, 93%. But if you take out that 0, well, you're probably closer to sort of like 95, 96% positive result for the rest of the calendar year, which is good news for Bitcoin, of course. Bitcoin pushing higher. If we have a look as I'm recording this, we just got a peak of 48,800, which is about $100 or so lower than the ETF top. Now, I want to take it back to this chart, looking at the timing and where we sit now for this stage of the cycle before I get into the fear and greed. Some things are looking relatively interesting there. So in terms of where we sit right now in February, a couple of months out from the halving, we've seen 23 months from the cycle low until the breakout into a new all-time high. That happened last cycle. Cycle before that, it was 24 months. Pretty close here, roughly 2 years from that bottom. The market did hold out for a few more months in the previous, the cycle before last in 2016-17. But in 2020 and 2021, the cycle ran up straight through that all-time high. There's only a couple of weeks that it paused at the all-time high before it ran through those levels. So there's been both options here. A few months where it's sitting around the all-time highs before it takes off and basically just breaking straight through and going gangbusters. And if that happens, well, like we saw last time, it had a pullback and then it had to pause again before it ran to test a new all-time high. Whereas in the case of sitting around the all-time high for a lot longer, well, that was basically the reaccumulation before that big breakout into that pump to that final peak. So there's two things we want to find out about this. How long do we have to go until a new all-time high, just based on the previous cycles? And how long does the bull market have after it breaks into a new all-time high until we reach that final peak? Looking at the previous cycles, we are roughly about 8 months away from hitting a new fresh all-time high price for Bitcoin. And once that happens, about 12 months until the peak. So we go back to 2020 into 2021, you see there's 12 months once Bitcoin breaks into a new all-time high. There it is right there. It had 12 months running into that final peak. Very significant correction in the meantime. But looking at the previous cycle, Bitcoin didn't have a significant correction like it did in 2021, but the altcoins had a very significant correction in the middle of 2017. I got into crypto roughly around March 2017. And I remember in that move from about, I think it was the June period, it was a huge correction for a lot of altcoins. Maybe it doesn't happen this time. Maybe we just run straight up and we keep going. But I'm just aware that there can be big corrections in the middle of those bull markets, especially for altcoins, if they've been running pretty hard for quite some time, which they have been at this point. So 8 months until a new all-time high. Then once we hit it, 12 months till that final peak. That gives us about 20 months to go from this point in time. So just under 2 years, coming up to sort of 1.5 year period, which essentially puts us nearly at the midpoint of the entire bull market. We know that it takes about 3 years from the low to the top. There is your 35 months. Again, the previous cycle, low to the top, 35 months. Cycle before that, cycle low to the top, roughly 37 months, so a month after that 3 year period. At around that 18-month point, we're about halfway through the bull market. The biggest, fastest gains come in that second half. And so we're about a couple of months away from that, which essentially happens after that halving point. Now, there was one more time frame I was using to essentially balance these markets to see if we had any similarities between now and the previous cycles. Previous cycles, all-time high to when it broke out into a new all-time high, 38 months. That was the 2017 bull market. So the 2021 bull market, we had the all-time high at 20 grand. When it broke out, that was 35 months. So it was 3 months less. Now, some might say, well, what if it's 3 months less this time? And I'm happy to look at all options, of course. If we take it 3 months less, well, that takes us out to July of 2024, essentially 3 months after the halving. Nothing is impossible. The timings have been relatively the same leading into that peak. So if it is July this year, if it is Q3 instead of what I'm thinking probably around Q4, getting closer to that election, well, then I would say that that gives us roughly 15 months in that all-time high period for Bitcoin. So I don't think the ends are going to be too different in terms of the entire time frame from the low to the high. But if we happen to move a little bit sooner, maybe we hang out in all-time high territory, which is above the previous all-time high, so above 70,000. Maybe we hang out there for a little bit longer than what we have done in the previous cycles, where we only had roughly 12 months from that all-time high to that peak. Now, I want to get into the market sentiment because it has been a long time since Bitcoin has hit anything relatively close to extreme fear. But let's have a look at the 777-day record that Bitcoin has just broken, closing out this week at 48,300. This is the highest closing price for Bitcoin in 2023, and it's the highest closing price since December of 2021, which essentially makes it a 777-day record. Bitcoin has not closed at this price since it went on the first collapse from the all-time high, had that little bounce into that small top, and then basically collapsed from that point into January 2022. And so this has been now the highest closing price since that time. A pretty big feat for Bitcoin, especially as we've come out of a significant low in late 2022, and we've been tracking this bull market the entire way from that bottom, while, you guessed it, the majority have been looking for further and further downside. Now, these high closing prices speaks to the strength of the bull market. I don't want to get too moon boyish and too much perma bull, because, well, I mean, the market has moved up very significantly for 17 weeks since that September low. And sure, we could break this top. It's only $100 away. And that would then take us into roughly 22 weeks from that cycle low in September of 2023. Eventually, yes, there is some more significant or longer pullbacks like we've had in previous cycles. You hit those resistance levels and the market basically tracks sideways for a period of time. We only had 2 weeks down. I will be the first to admit that was a lot shorter than what I was expecting. But I was expecting at least a few weeks from that point, if you remember from the previous videos. It didn't happen. We got a measured move. We got an exact 21%, 21.5%, which was pretty much exactly the same as the previous corrections that Bitcoin did in 2023. We got that one on the money, 20 to 22%. We're expecting maybe a few more percent to the downside. It just didn't happen, and we've seen Bitcoin push higher, which is why you should always be prepared to follow the charts. Watch what the swing indicator is doing. As you can see here from that low and the breakout, it was starting to break previous swing tops, putting in higher lows as well. As we looked at in the previous videos, there was one more piece to this puzzle, and that was the volume. The volume just wasn't meeting the price movements to the upside. Now, we haven't broken out from those tops. We haven't closed above those tops yet. So I don't want to get too far ahead of ourselves here and just continue to follow what the market's doing. And of course, if we are trading, well, then we just continue to follow the swing chart like our members are doing. Links in the top of the video description for the TIA report and the 7-day free trial of the Gann swing indicator. Now, if you want to learn how to trade cryptos in more detail, check out the premium membership. Congratulations to our members over here, 111%, GG, Crypto Ricardo, Crypto Alien, 36%. You guys are nudging some really, really good results in these markets to the upside, getting your 400s, 100% return. So congrats to you guys. If you guys want to learn more, link is in the top of the video description to learn how to use this Gann swing indicator even further. And of course, start to set up your plans for this coming bull market. As for the timing on the altcoin market, we're now 2 months away from the halving itself, and we really have not had any sort of significant pullback since the August, September low of 2023. Market's been up 1, 2, 3, 4, 5 months now, potentially into February, potentially 6th. And as we looked at a couple of weeks ago for the month of February, there was the possibility of having a correction in this month. Nothing significant like a COVID crash. I've maintained that we're not going to get a COVID-like crash at this point in the market. Of course, it's a black swan event. But in terms of where this market sits, anything back to those previous tops is a healthy correction. So those tops are roughly around 400 billion. And at this stage, sitting at 500 billion, it doesn't seem like we're going to get our cake and be able to eat it too. It looks like the higher lows are getting put in roughly around 430 to 440 billion on the altcoin market cap. Now, in terms of timing going into those peaks, it's roughly the same as Bitcoin. So I won't repeat too much here. You can see the Bitcoin new all-time high happened about 23 weeks from the cycle low. 23 weeks from the total cryptocurrency market cap cycle low puts us in roughly November of 2024 to get to that new Bitcoin all-time high. And that's essentially where the altcoin market cap really broke out, and you had about 6 months into the peak, significant correction, and then that final pump to the top. So in terms of timing, that is, again, 12 months from that top to the Bitcoin new all-time high. And where we currently sit in timing, it's about 20 months to go until that peak. So basically the same sort of thing as Bitcoin. We'll continue to follow it up here on the channel, looking at the strength of the altcoin market cap. But I want to review the Crypto Fear and Greed Index because we haven't seen any extreme fear since about January of 2023. So over 12 months, the market has not had any sort of extreme fear presented to it. We had a couple of times here in March of 2023 with the banking crisis, but the index only got to 33. For the traditional markets, it was extreme fear. For Bitcoin cryptos, it didn't seem like extreme fear, especially when you're looking at the reading here, it was only into the fear reading, not the extreme fear. And so what I've looked at over the course of history here is once we essentially break out and don't revisit that extreme fear, it could stay elevated for quite some time. So the extreme excitement or the greed, the extreme greed, the neutral feelings, and if you want to take it somewhere halfway between that, the fear reading here in about the 30s, the market can stay elevated for a long period of time. Last cycle, it was about April, May 2020, when the reading went from fear into neutral and essentially did not look back into the extreme fear until we got the first all-time high, which is roughly here, and then the market dropped off in May. So what does that look like? That was basically this period and then the dump. So from here, from the breakout, the market ran straight up. Bitcoin, cryptos, we had DeFi summer in there as well, some profits being taken, but essentially the emotion of the market, the psychology here, the fear and greed index, didn't come back to an extreme fear until we had that first collapse. So this could stay elevated for quite some time. I'm hoping we get some sort of reset to at least build another base to go higher again for longer. But of course, I don't control the markets. I'm just reading what is going on here. So if we do stay elevated for these periods of time, last cycle was at least 12 months. If it was 12 months again, well, that pretty much takes us to where we are now before we get an extreme pullback. I don't know if that's going to happen. I'm just looking at the exact 12-month period here. You can see from January 2023, we are now in February 2024. Similar to what happened last time, you see the breakout in May 2020, and it came back in May 2021. So basically, it was a 12-month period above this line here of roughly about 36, 37, 38 on the reading. Now, we did have 2 times here where it did go under the reading. Maybe that's been enough to at least hold us out here for a bit longer. At the end of the day, the main message I'm leaving with this, with the crypto fear and greed index, is that once we break into these highs, look, we've had a couple of times underneath, but not for very long. They can stay elevated for quite a considerable amount of time. And that's essentially because we're in that stage of the bull market where people just don't think that the market has the possibility to roll over. Now, once it starts to happen and you get those lower highs, it's probably coming towards the end. So we'll continue to review this chart on the channel. And one more final thing for you Aussies, Bitcoin against the Aussie dollar is now sitting at $74,400. It has broken out of the ETF top news point there back in January. And in the previous cycles, well, the Aussie dollar has hit, or the Aussie dollar against Bitcoin has hit a new fresh all-time high before the US dollar hit a new all-time high. It was roughly about 2 weeks in the previous cycle. So the Aussie dollar hit a new all-time high, breaking, maybe in this case we break 93,000, and then the US follows suit and breaks above $69,000. Links in the video description for your Aussie on-ramps here of SwiftX, Bybit, and BitGet. Get set up before things get ballistic out there. I'll see you guys at the next video. And until then, take care and peace out.